presented by Private Internet Access.
Welcome back to We're All Satoshi. It's the end of October 2017. I'm Rick Falkvinge speaking to Moritz Bierling from Neufund.
Yes.
So, Neufund is solving a very exciting problem in terms of building an ICO platform on top of Ethereum. How does that relate to Kickstarter, Indiegogo? We talked a little bit about how the problem you're solving is making it easier to create a crowdfunding.
Mm-hmm.
How?
Well, at the moment, people have these crowdfunding sites. I think there is actually a better analogy than crowdfunding for this. There's also these crowd investing sites. I'm sure you've heard of them. There are some in the German-speaking space. I'm not sure where else, but definitely in the English-speaking space as well. And we kind of think of crowdfunding as what is left over once the big guys have graced the market for the opportunities, right? If you're a small holder of assets, then you kind of go to crowdfunding to get your little token or your little project or your little thing that you back. But we're talking about something where you're actually buying equity in a company using tokens. And so that's actually what we're doing. We're connecting the legal equity, the forms or the legal contracts that exist on paper, and they're still existing, with tokens on the Ethereum platform, and they kind of reference each other. And so you have both the smart contract capability of contracting or transferring these very easily, but at the same time you also have the backup of the legal system that in case something goes wrong, you can still go to court and say, okay, here, this guy defrauded me or something, can you please help me get my money back? Something like that. Because at the moment, we're still in this frontier land, which I very much appreciate in many respects. But at the same time, it also opens up the door to many fraudsters. They exist in this space, and we should not talk around that, I think. And so having a possibility of giving people ways to safely dip their toe into the ecosystem and then go slowly into it, it will make it much easier for them to kind of get comfortable with it.
So you're also creating transparency into investing.
Yes. And we're doing that not only through the platform where we have the companies listed, where they list all this information about their deal, etc. But we also actually started several projects that go into the transparency direction. We started an ICO monitor, which is at icomonitor.io, which is a technical tool for journalists, for companies themselves, and for any kind of actor in the public crypto sphere to evaluate ICOs purely on the technical level, whether they're being executed correctly, whether they are based on trust principles. Because at the moment, there are lots of these ICOs going on in the space that are not much better than just you putting your money into an envelope and sending it to those guys' office. You still have to trust them to execute it in the right way. You don't have many legal assurances to go back on when things go wrong. And you're not actually buying anything in those stakes often. You're just getting these tokens.
That's the first level of problem. You have a secondary level of problem that even if the people do exactly what they say they will do, you can easily see that a lot of these ICOs are clueless. Right. As in, there's one layer which are just scams.
Yes.
But then there's another layer where it's obvious that these people have no business sense.
Right.
And then you have sort of a third layer, which is they're not even trying to make a business. They're just trying to make a fun ICO.
Get that Lambo.
Yeah, exactly. Get that Lambo. I mean, the equivalent of the Kickstarter potato salad.
Yeah.
Somebody was going on Kickstarter saying, I am, basically making a potato salad. I have not decided which kind yet.
Right.
And raised like $50,000 because it was a fun thing.
Right. The equivalent of that in the Ethereum space is the useless Ethereum token at uetoken.com, I think, where somebody very explicitly said, I'm going to use all of the funds committed to my token sale to buy electronics and fund my lifestyle and whatever, and people still contributed. So it's a very fun space in that regard. But
that part at least is honest, right? As in, you're buying something from me, and just to be clear, you're not getting anything in return whatsoever from this useless Ethereum token. And I just don't know what to make of this. Like, why do people spend $50,000 on somebody on the other side of the planet making a potato salad?
Mm-hmm. Well, I think there are kind of two things going on. One is that there is a genuinely new model for how the development of projects is being funded.
And so it's exciting for the fun of it.
Yes, for the fun, but also kind of you start with a very abstract idea. I want to see this project realized over however many years. And there is some legitimacy. I mean, Ethereum itself was also once just an idea, and then through starting the token sale and building some marketing materials at the beginning, they raised funds and they started this platform, and it is now growing and it's stable and all these things. And so there's this weird progression from having this very abstract idea being funded at a very early very early stage, and then slowly adding practicality to it, and that can work. But again, it's a very risk intense model. And the other side, of course, then people who see this very easy mechanism of raising funds, they just pounce on it and take it and then just imitate the forms and symbols of the more legitimate projects to attract those funds. And so at the moment, we're not only seeing experienced traders transition from the old financial world to the crypto sphere, because there the flipping of coins is so much easier than with other financial products.
Right.
But even established VC funds and hedge funds are doing this now. They're getting into the pre-sales early through connections.
Right.
Buying those coins at early prices and then flipping them immediately to make their return. And so what you're seeing is an inflation of this market through easy capital that then ends up actually hurting the large amount of people that want to see those projects maybe realized, who are then left holding the last end of the stick.
So let's talk about how Neufund changes this. You had an early funding run this year, which was kind of traditional.
Yeah.
Raised about 2 million euros.
Yes.
And you're now aiming to raise about 200 million for something called Neumax.
Yes. So,
which you're in turn using to invest in startups.
In a sense. So I have to clarify a few things here. The one thing is we're not an ICO platform in the strict sense, because we're not actually enabling ICOs. We're enabling what we call ETOs, equity token offerings. So companies don't just issue this coin that has no attachment to it, no actual claim or value, other than maybe utility tokens. They are actually issuing a token that is connected to equity, to real legal equity. And so they actually buy a share in a company that is much more easily transactable. That's kind of one of the value adds. The other thing is that we're making it possible for small investors, small people, or people who have few assets to participate in the crypto sphere while actually having that equity, and to hope to gain something from investing in early stage efforts, not only from projects that they like, but also maybe from their friends and family that otherwise would not be able to raise funds. For startups, this is also very attractive because they can shorten down the roadshow that they usually have to do from usually around 9 months, maybe more, depending on your network and your abilities, down to perhaps 6 months or 3 months, depending on your abilities. Because you can aggregate all the information about the deal that you have in one place, show it to investors, and also go to the crowd to gain that investment, much like regular crowd investing.
So you're making it much easier to get investors for blockchain-based company based on Ethereum.
Yes.
What's the trade-off? What does somebody have to sacrifice to go with you?
Apart from the transparency problem that some people might have with being on the public Ethereum blockchain, there's also just getting used to a new mental model of how to conduct deals. Because if you are investing in startups through this crypto sphere, there are new kind of capabilities that change the incentives at different stages throughout the process. So because investors are now able to transact, to actually sell their equity in those startups before any exit event takes place, they have to think about these things very differently. They can't, now there's kind of an incentive for startups to find new ways of structuring incentives throughout the whole process of building their company, to make sure that their investors don't just drop out like at the tip of a hat and they are left there hanging when their equity loses value. So either they will have to require investors to keep that for some time, or they have to have some way of maybe a buyback scheme for equity or something like that, to be sure that when there are bad news, not everything kind of in this cascade of bad news spirals down. because investors are now able to actually sell their equity before any exit event takes place, and that introduces some difficulties.
Would it be fair to say that if you're working with Neufund, then you have to think of your investors as partners in the company, the way you need to think about employees and vesting option schedules?
That's a very good point, actually, and I think that's actually an opportunity for the broader space to kind of shift this model from these startups being very quickly built up to produce outsized returns, because that's the only viable model at the moment, or at least the only viable model that we think is viable, and to shift from that to a more cooperative stance where the investor role shifts from being only the financier or primarily being the financier to performing an advisory role, to connecting people with the space, because suddenly it is in their incentive to support this project, because they don't have to ask of the startup these outsized returns anymore. So there's a new kind of model to be negotiated between these two sides. Who has what incentive at what stage in the process? And so I'm not even sure whether the analogies of the Series A, Series B, and seed and these kind of things are accurate anymore, because the financing event can be so large at the beginning that you maybe have to negotiate, okay, we're going to do this large event, and then afterwards we have these milestones to be negotiated, and then the investors are incentivized to help us reach them, or something like that.
Cool. So Neufund, the next step now is to do its big fundraising to get a, I guess, pool of money to help smaller startups.
Yes.
When is that happening?
Very, very soon. By the time that this video will be broadcast, it will already be announced. Yes.
Okay.
And we've been saying autumn deliberately vague because we've been kind of ironing out some interdependencies to make sure we can actually keep our word on those dates. But yeah, the model that we're going by is only nominally an ICO, and there are very marked differences to the regular ICO, you already have to say, model. We're calling it an ICBM, also somewhat with a wink. It's not an intercontinental ballistic missile, but it is a initial capital building mechanism. The reason we are calling it that is that we're not actually taking any funds for ourselves. We're not accumulating any capital from investors that goes to our bank.
Really? Nothing for founders, nothing for staff?
Nothing. No, we're not even selling a token in that sense. It's a technical sense, but yes, we're not selling a token. What we're doing instead is, because we are a marketplace, in essence we're a two-sided marketplace. We have the problem like any other marketplace. We have, on the one hand side, the buyers, and the other hand side, the sellers. So we have the startups and the investors. And what you need to do to kind of bootstrap a marketplace, you have to have both sides present to get any activity going. And so what we're doing is we're starting on the investor side with bringing a lot of the capital onto the platform, but under the control of the investors themselves. Right. So they don't actually give us any of their money. They're just locking their money in a smart contract that is from the Neufund platform, and as a reward for locking their funds on the platform for use on the platform once we go live, they receive a reward in the form of Neumarks, which are our protocol token, one of the 3 token types we have on the platform. And so this is kind of the best opportunity for investors who want to use our platform in the future and to invest in startups, the deals that they already have, or startups they find on the platform, to get an outsized reward in those Neumark tokens. And they actually have a value that is not just a speculative value, hoping that the platform itself will grow, but they have 2 very distinct value sources. One of them is it's kind of a revenue token in a sense. So all of the revenues that we take from the platform fees we get on every ETO conducted on the platform, every equity token offering conducted by a startup, gets distributed to all Neumark holders. So the investors who kind of own the platform in that sense, they receive revenue every time a startup does an equity token offering. And so that gives them an incentive to get more deals onto the platform and to provide it with more capital. On the other hand, we also have these Neumarks also represent an economic ownership of a part of the platform pool. You can think of it kind of like an index fund for the whole platform. You have equity tokens of all these startups being given out from the startups, and we take a 2% fee of all of those startup equity tokens themselves and put them into a platform fund that then can grow in value over time. And so when you sell a Neumark, you sell those two values.
Right.
Yeah.
That is a new model, but it sounds like you've been thinking about this for quite some time.
Yes.
And it's got to be exciting to really finally see it come about.
Right.
Let's come back a little bit to current affairs and what's happening right now in the next
Sounds
step.
good.